This is East Asia Tonight.
Good evening, I'm Ateli Edwards. Tonight's top stories. The Trump administration is rolling out a $12 billion plan to stockpile critical minerals, shielding American manufacturers from supply shocks as the U.S. moves to cut reliance on China. Taiwan's President William Lai doubles down on friendshoring with Washington, pushing deeper trade and economic cooperation with Western allies as Taipei looks to tighten strategic links. Meantime, Taiwan's main opposition, Kuomintang deputy chair, stressing family ties with the mainland as he and senior officials hold a forum with China's ruling party in Beijing. President Xi calls for an equal and orderly multipolar world as he seals a deeper strategic partnership with his Uruguayan counterpart. It's the first visit to Beijing by a South American leader since the U.S. captured Nicolas Maduro. Also in a bulletin, Asia's biggest aviation event opens in Singapore, drawing more than 1,000 companies from dozens of nations to showcase innovations in AI, emerging technologies, and sustainability. U.S. President Donald Trump is pumping $12 billion into the creation of a stockpile of critical minerals, seeking to counter China's dominance in the sector. Known as Project Vault, it will initially be funded by a $10 billion loan from the U.S. Export-Import Bank and $2 billion from the private sector. The Export Bank said it approved the loan yesterday. Mr. Trump says the funds will be used to acquire and stockpile minerals for automakers, technology companies, and other manufacturers to shield them from supply chain disruptions.
Just as we have long had a strategic petroleum reserve and a stockpile of critical minerals for national defense, we're now creating this reserve for American industry, so we don't have any problems.
A U.S. Secretary of the Interior, Doug Burgum, said that Australia, Japan, South Korea, Saudi Arabia, and Thailand have joined the U.S. as part of a global coalition for critical minerals trade. He added 11 more countries will be announced to the trade club later this week. China dominates rare earths, handling about 70% of global mining and 90% of processing worldwide. Meanwhile, Taiwan has laid out plans to collaborate with the U.S. on areas like AI and critical minerals, with Washington praising Taipei as a vital partner. Taiwan's economy minister says the U.S. has expressed interest in the island's plan to build a rare earth supply chain that can meet 50% of Taiwan's demands.
那美方认为这样的一个模式，如果可以有这样的量产的一个完全产线的话，他希望我们这道的模式可以复制到其他的国家去，协助这个全世界的这个稀土供应链安全上的一些韧性。
MP Materials, the operator of the Mountain Pass mine in California, rose more than 3% in extended trading. USA rare earth and critical metals popping more than 3% and around 1.7%. Well, investors bet the initiative could accelerate domestic demand and government-backed financing for the sector. Well, for more analysis, let's bring in Chen Bo, Senior Research Fellow, East Asian Institute, National University of Singapore. Thanks, Dr. Chen, for joining us this evening. So let's talk about Project Vault. How do you think it lands in China, right? From Beijing's perspective, how do you think they're interpreting it?
Well, first of all, it is obviously a U.S. measure to prepare for the Chinese kind of counteractions in the future kind of conflicts. So if the U.S. can successfully do that, then at the end of the day, there will be less leverage at the hand of Beijing. So this is definitely some kind of alarm to Beijing.
So, we've seen friendshoring in semiconductors, for instance, meaning, sourcing from countries that are geopolitical allies. Do you think that critical minerals, it seems to be heading that same way?
Yeah. Well, I think it's obvious that the U.S. is trying its best to build up a sort of a resilience against China in terms of the rare earth supply, because as we've already seen that this kind of a rare earth is really a critical issue in terms of the U.S. National security, in terms of the production for so many firms in high-end equipment. However, unlike the chips, it is much harder for the states to build up its resilience in the short term. Namely, within 3 years, I think it's almost impossible. And furthermore, which I think is more important, is that for aircraft and for weaponry, it is relying on not only just rare earths, particularly it's relying on the heavy rare earths. And the heavy rare earths is actually more concentrated in the supply and the production in China. Therefore, if we consider the heavy rare earths into our account, it will be even harder. So I'm a little bit suspicious on how long U.S. can actually build up its own resilience on its supply chain on rare earths and the related kind of critical mineral supplies, along with so-called friendly economies. So I guess at least in the short run, at least within 3 years, it's impossible.
Okay, well, that is a very definite timeline there, not within 3 years. For East Asia, though, I mean, the big question is who's going to get caught in the middle, right? Whether it's Japan, South Korea, Taiwan, how do you expect them to position themselves if, let's say, Washington is asking them, we want tighter alignment on critical minerals and tech supply chains, for example?
Well, I think it is now very kind of subtle or very difficult kind of moment to the middle powers in East and Southeast Asia. But two countries specifically, or economies specifically, like Japan, Taiwan, they've already choose their side. They will lean towards the United States for sure. For other economies like Korea, like most of the Southeast Asian nations, perhaps they will still try their best to be a neutral kind of maintain a neutral position. So at the end of the day, we will see perhaps on the one hand, they will cooperate to some extent with the states in terms of the critical mineral supply and also refinery, those kind of stuff. But on the other hand, they will try their best to avoid being positioned as a U.S. alliance and being sided with the states. It is to their benefits and to the national security as well to be a neutral kind of a power. So I guess this is what it looks like in the near future.
Right, I'm going to press you a little bit more about that timeline, Dr. Chen, because you don't think that Trump's vault is going to succeed in stabilizing prices for U.S. firms anytime soon, not within 3 years. But let's say if it does, right? How long are we looking at? And also then, if that happens, do you see China somehow adapting to what happens then?
Well, it is a very interesting kind of question. We are thinking about that. So if as a economist, we've been investigating on this kind of a supply chain on rare earths for quite a while. And if Trump or his successors can still sustain this kind of strategies or policies, then perhaps in 3 to 5 years, you can see gradual kind of supply by the U.S. on supply chain from this friendshoring kind of a strategy. And gradually, maybe 10 to 15 years, U.S. can build up a relatively independent kind of a supply chain. So that's the basic timeline agreed by most of the observers on this front. But during this period, I think China will not just stay quo. China will actually do it on kind of defense. On the one hand, China will try the best using this time window to develop its own kind of a bottleneck kind of technology in chips and others. At the same time, China may also trying to kind of consolidate or maintain its monopoly power in terms of very special kind of minerals or those kind of productions. One thing that I want to emphasize is that for the moment, U.S. just want to have enough stockpiles on those critical minerals, but it has nothing. It says little about the supply chain. because we don't need only those kind of critical minerals. We also need a whole supply chain to produce those kind of minerals to make it, producible for the downstream producers, like in the weaponry industries or other high-end equipment industries. So if consider those kind of supply chain, it will take longer time, and during this period, I would be very sure that China would try to build up its own resilience. So in the future, I guess these two biggest nations, in terms of their economic rivalry, they are trying to be more and more independent from each other.
Right, but if this escalates, Dr. Chen, are you worried about a minerals shock, some kind of a sudden disruption in a critical mineral supply? And if that happens, right, what does it look like for the region, and which Asian industries are going to be most exposed?
I think on the contrary, I don't worry so much anymore, because it is now a sort of a short-run equilibrium, because both U.S. and China understand that they have sort of the critical stuff that at the hand of each other. So rather than being conflicting with each other, they will actually make the relationship sort of under control. So in the near future, I think it's less likely to see this kind of a confrontation like what happened in last year during the reciprocal trade war. So I guess I guess it is actually the fact that the control or the leverage of both United States and China make the whole relationship more stable, at least in the next year also. But after, when both sides build up their kind of a resilience, it really depends on the relative speed. Then it's hard to predict. We will have to wait and see what's going to happen, because it really depends on how fast each side can build up their own resilience.
All right. Well, thanks for ending this interview on a somewhat positive note, Dr. Chen Bo, Senior Research Fellow, East Asian Institute from National University of Singapore. Well, CNA's When Titans Clash will be looking at the race for rare earths amid China's dominance and what can be done about this vulnerability. You can catch the full episode and more on our website, CNA or MeWatch app, and on YouTube. A Taiwanese leader, William Lai, warns against pivoting to China from the U.S., saying that the island should look to fellow democracies for economic cooperation.
到底我们要继续携手美国、日本、欧洲友盟国家走向世界，还是要再度的锁进中国，去推动所谓的二次西进？我们可以让国人做一个清楚的做选择。以建立科技多元布局为两大目标，让台湾产业能够进一步立足台湾，布局全球，行销全世界。
Last month, Washington held a high-level forum with Taipei, calling the island a vital partner. They also signed statements on economic security and the Pax Silica Declaration, a U.S.-led initiative aimed at securing AI and semiconductor supply chains amid intense competition from Beijing. Mr. Lai, however, has not completely ruled out cooperation with China.
我们两岸也有共同的目标，就是创造 两岸人民的福祉。只要中国正视中华民国存在的事实，也愿意尊重台湾人民自由民主生活的方式，只要能够对等尊严，台湾很乐意跟中国进行交流合作，来创造和平共荣。
Well, Mr. Lai did not directly refer to Taiwan's main opposition party, Kuomintang. His remarks are an apparent response to KMT's economic vision for Taiwan, criticizing it for being overly reliant on China. Mr. Lai has been clashing with the opposition over general and military spending aimed at deterring pressure from Beijing. Meanwhile, senior figures from Taiwan's main opposition, Kuomintang Party, are in Beijing for a think tank forum with China's Communist Party. The meeting called for joint efforts to deepen cooperation and promote the peaceful development of cross-strait relations. The KMT deputy chair described the forum as a platform to voice public concerns and to improve people's welfare.
真实的台湾民心，不只反映在渴望更认识大陆、更实际接触大陆，还包括期望两岸之间能够维持沟通管道。我深切期许，未来两岸应该以确保人民福祉为最大目标，坚持9·2共识，反对台独，求同存异，搁置争议，共创双赢。
Coming up on East Asia tonight, China's food delivery price wars are cooling. Big brands are lifting prices as Beijing steps in to curb subsidy-driven competition. Plus, Nintendo's profits are soaring on the back of the Switch 2, but a global chip crunch could threaten those gains. Hello again. Good to have your company on East Asia tonight. Well, Roland Lim joins us now for the business news. So, Roland, apparently there's been a major shift in U.S.-India trade relations. Curious to know, how did the markets in the region react to the tariff reduction on Indian goods?
Right, the markets were cheering the deal. The rupee jumped against the dollar, and key Indian equity indices are also sharply higher. East Asian markets finished broadly higher today with the Trump-Modi trade breakthrough lifting risk appetite. In Mumbai, the Nifty 50 surged almost 3%. At one stage, it was 5% up as traders cheered the sharp cut in U.S. tariffs on Indian goods and hopes for stronger export growth and capital inflows. The rupee also firmed more than 1% against the greenback to around 90.40 at one point. It's now at 90.22. This eases the major overhang on India's external outlook and supports the currency in the near term. The positive mood spilled over to Japan. The Nikkei pushed higher, added by a weaker yen and a broader tailwind from improved global risk sentiment. Chip-related shares leading the gains there. South Korea's Kospi also rallied, with exporters and tech names benefiting from the brighter read-through the global trade and demand. Samsung Electronics rose, let's have a look, 11.4% for the day. SK Hynix also gaining 9.3%. Over in China, the Shanghai and Shenzhen benchmarks posted modest gains alongside Hong Kong, which turned up in positive territory despite ongoing domestic policy and growth concerns. Losses in tech shares capped the gains. Chinese tech stocks taking a sudden and sharp hit. The abrupt sell-off of the Hang Seng Tech Index tumbling as much as 3.4% earlier today, briefly pushing it into bear market territory. Losses later erased to around 1%. The index is down 20% from its October peak. Investor sentiment rattled by fears that Beijing could raise value-added taxes on internet firms, and this follows recent tax increases on telecom companies. The sell-off also comes amid renewed volatility on Wall Street, where doubts are growing over lofty tech valuations and fewer expected U.S. rate cuts. Adding to pressure, Tencent's cash giveaways to promote its AI app have intensified concerns over a price war in China's tech sector. Still, some analysts say the index looks oversold, with a potential rebound ahead as earnings season and key policy meetings approach. The runaway success of the Switch 2 console driving up Nintendo's net profit by more than 50% in the 9 months to December, $2.3 billion. Revenue nearly doubled on year to more than $12 billion. But a global memory chip shortage created by frenzied demand for AI hardware could push up manufacturing costs. The Switch 2 became the world's fastest-selling game console with nearly 17.4 million devices sold during the 9-month period. Qantas is exiting Japan's low-cost airline market, selling its entire stake in Jetstar Japan as it sharpens its focus on more profitable routes. The Australian carrier will sell its 33.3% stake in Jetstar Japan, and Japan's development bank will become a new shareholder, and the airline may be rebranded by mid-27. Jetstar has been struggling to generate stable income as it relies heavily on domestic travel within Japan. As demand for full-service business travel within the island nation has slowed. Major food and beverage chains in China are raising delivery prices, marking a retreat from years of aggressive discounting as regulators move in to rein in subsidy-driven price wars. Restaurant and coffee chains, including KFC, Coty Coffee, and Luckin Coffee, have begun lifting prices on food delivery platforms. Now, the shift comes after China's top antitrust regulator launched a probe into competition practices in the food delivery sector. That's amid concerns that platforms such as Meituan, Alibaba, and JD.com were fueling deflation through heavy subsidies. And while subsidies boosted online orders, they squeezed margins across the industry. Analysts say prices are now rebounding, particularly for coffee, fast food, and bubble tea, as Beijing pushes to rein in destructive competition.
Well, despite the uptick in the dollar in recent days, the trend is still for a weaker greenback against its G7 peers. But why then aren't Asian currencies, especially those that export to the US, getting stronger? Well, Roland Lim is here to explain this currency puzzle to us. So, Roland, what's going on?
Yeah, a simple answer is that this isn't just about trade surpluses or is it about interest rate gaps anymore. It's about capital flows, where the money is flowing to. I'll give you a simple example. Say Beijing has a trade surplus of $50 billion this year, but Chinese investors decide to buy $80 billion worth of US stocks and bonds. So that's $30 billion in excess that Chinese investors need to buy. And so when they buy dollars, that's when their currency weakens. Simple as that.
Okay, but the interest rate gap with the US has narrowed. So normally, I thought that should help Asian currencies.
Yes, you're talking about, say, for example, the yen carry trade. So interest rates in Japan are so low that they borrow yen and then put it into work in the US where returns are much higher. So yes, it usually does help, but investors are looking way past rates now, and they're focusing on the magnet of US returns, especially with the AI tech boom that's happening over there. So that's pretty attractive. So with many Asian investors piling into Asian equities, into Asian bonds, they need dollars. And when they buy dollars, their local currency weakens against the dollar.
Okay, so to help us break this down even further, in a nutshell, who's buying what?
Yeah, so three big economies. Taiwanese life insurance, big buyers of US treasuries, of US debt. And because of accounting rules, they don't actually hedge against the Taiwan dollar. So there's a structural demand for US dollars. Second one, South Korean retail equities investors, they also heavily buy US stocks. So again, more demand for US dollars, so their currency weakens. And finally, Japan's yen weakness because of policy of fiscal uncertainty there, and that's spilled over to the regional forex market sentiment as well. So these are the three reasons behind that.
Mm-hmm. And when it comes to politics, right? I mean, there's always a political angle to this all. Tell us more about that.
Yes, that's another pressure point, really, to Asian currencies because there are commitments, investment commitments by all these Asian exporter countries in order to get preferential tariff rates. So we're talking about multi-billion-dollar investments into the US over the longer term. And again, that means capital outflows, and that means that they're going to be buying huge amounts of US dollar. And that's been the narrative, really, for the Asian currencies that are big exporters. So I'm talking about the Taiwan dollar, I'm talking about the Korean won, as well as the Japanese yen. These people have committed to building infrastructure, building huge plants in the US. And Treasury Secretary Scott Bessent has also weighed in. I mean, one time he publicly talked about the weakness in the yen, and that got markets alarmed. But at the same time, then he had to backtrack and then say that no, the US believes in a strong currency and that it's denying any intervention, that it will not coerce any Asian economies to actually strengthen its currencies because the US wants it stronger. So that's an important message it sends to traders that don't assume that Washington will be forcing Asian economies to try to get their currency stronger faster.
All right, well, many thanks for that explanation. Roland Lim there, speaking to us about Asia's currencies weakening. All right, time now for another break, but coming up on East Asia tonight, Donald Trump announces a trade deal with India, both sides lowering tariffs, and in New Delhi's case, lifting non-tariff barriers. This is East Asia tonight, and here are the headlines we're following. U.S. President Donald Trump pursuing a strategic stockpile of critical minerals aimed at challenging China's dominance in the sector. Taiwanese leader William Lai warns against pivoting to China from the U.S., saying the island should turn to democracies to help boost its economy. And that warning from Mr. Lai made as Taiwan's main opposition party, the Kuomintang, holds a think tank exchange with the Communist Party of China in Beijing. Topics include AI and tourism. The Chinese President Xi Jinping sees deeper cooperation with Uruguay to advance what he calls an equal and orderly multipolar world. Mr. Xi has met with Uruguayan President Yomandú Orsi in Beijing, the first visit by a South American leader to the Chinese capital. Well, the two leaders signed a joint declaration to deepen their strategic partnership and expand cooperation across 12 sectors, including science and technology. The Chinese president says they will continue to support each other's core interests and address major concerns. Mr. Orsi says it is a shared responsibility to raise their partnership to the next level. He's leading a delegation of 150 business leaders on a week-long trip that includes a visit to Shanghai. China is Uruguay's largest trading partner, with exports to the country totaling $3.49 billion last year. Now, low-priced Chinese exports, especially autos and e-commerce goods, have been expanding their market in the region. Chinese brands such as BYD have made inroads in Uruguay. BYD is now the third largest vehicle seller, trailing behind Chevrolet and Hyundai with a 22% market share. Now, India says that negotiations for a more comprehensive deal with the U.S. will continue after President Donald Trump unveiled a trade agreement with New Delhi. Well, that announcement following months of tensions between the two countries. A trade deal is now in effect, with tariffs on India slashed by more than half to 18% from a total of 50%. India, in response, has lowered its duties and non-tariff barriers on the U.S. to zero. Mr. Trump says the agreement came after a call with Indian Prime Minister Narendra Modi. Mr. Trump has emphasized India will now buy oil from the U.S. and potentially Venezuela, and claims that Mr. Modi agreed to stop buying Russian oil. Washington is removing a 25% levy slapped on New Delhi last year to punish it for the purchases it says funded the invasion of Ukraine. The American leader also says Mr. Modi committed to buying $500 billion of American goods. Well, that's about 12 times as much as what India bought last year. An Indian official says the country's commitment to buy U.S. goods under the New Deal includes petroleum, defense, electronics, pharma, telecom products, and aircraft. Mr. Modi, in his social media post, did not mention a halt in buying Russian oil. He thanked Mr. Trump for reducing the tariff to 18%, calling it a wonderful announcement. Well, just 2 months ago, Russian President Vladimir Putin visited New Delhi, offering Mr. Modi uninterrupted shipments of fuel. In 2024, Russia supplied nearly 40% of India's total crude imports. Earlier, we spoke with Sadananda Doom, a senior fellow at the American Enterprise Institute, and he gave us his take on the impact of India's trade deal with the U.S. on Russia-Ukraine peace negotiations, and also the balancing of relations between the U.S. and China.
To the extent that India is cutting back sharply on its oil purchases from Russia, it certainly increases pressure on Russia. As you know, two largest buyers of Russian oil since the Russian invasion of Ukraine in 2022 have been China and India. So if you remove India from the equation, it definitely adds an element of financial pressure to the Russians. So there's no doubt that this would be a factor, perhaps not the most important factor, but certainly a factor in nudging Russia towards the table to talk peace. The U.S. has been the most important relationship for India for more than 20 years now. And it came as a huge shock to the Indian system to sort of, to have to see this relationship in many ways start to unravel. I think this is going to be reassuring. It's going to allow the Indians to have sort of, more confidence in their relations with the Chinese and with others. There is some kind of partial rapprochement going on with China. There's a partial thaw. I don't think that India and China are ever going to be the best of friends. There are deep structural issues in their relationship. I think India is probably going to continue to normalize to an extent with China, but you're not going to see anything dramatic, for example, like India pivoting away from the U.S. toward Russia and China. I don't think that was anyway going to happen. I think that's even less likely now.
Well, the deal with the U.S. is India's third major trade pact in a year. It comes just a week after the Modi government struck an agreement with the European Union. Well, EU chief Ursula von der Leyen called it the mother of all deals, the result of nearly 2 decades of on-off talks. Well, the EU-India deal slashes tariffs on most goods for both sides and is projected to double Europe's exports to India. For instance, India's tariffs on EU wines cut immediately by half to 75% and eventually to 20%. Well, for cars, that will fall sharply over 5 years to 10% from as high as 110%. On the EU's part, it cuts duties to zero on a range of Indian products, including marine goods, leather and textile items, chemicals and jewelry. Last July, India clinched a deal with the UK with tariffs cut for most goods from both sides. Duty for British products heading to India falling on average to 3% from 15%. Whiskey and gin are seeing a bigger cut to 40% over a decade from 150%. As for Indian goods going to the UK, zero duty is likely for items such as textiles, gems, machinery, down from 4% to 16%. Now, there is also one sector that India says it will never open up on, and that's the dairy industry it's fiercely protective of. Now, the CEO of India's largest airline, Indigo, says that the EU-India trade deal could give a boost to the company's push to expand internationally. Peter Elbers was speaking to CNA.
Well, for the last, I would say, 10 days, we have seen a couple of events which are very good for India. And of course, there was first the EU-India trade agreement, which has been in the making for a long time and which was concluded last week. Today morning, we saw this news. And clearly, with the growth of India, which is one of the fastest growing large nations in the world, with again a 7+% GDP growth, that fuels international traffic, that fuels the Indian aspirational traveler, and clearly the Indigo strategy of going more international, expanding our network, basically brings these elements coming together in a very good way.
Well, coming up on East Asia tonight, we'll have more from Indigo's CEO on last year's disruptions to India's largest carrier and its road to recovery. And Elon Musk's SpaceX merges with xAI ahead of a potential IPO that could be worth more than $1 trillion. Asia's largest aviation event, the Singapore Airshow, has taken off, drawing more than 1,000 companies from over 50 countries. Well, the Airshow, now in its 10th edition, will feature the strong participation of aviation technology companies, showcasing innovations in artificial intelligence, emerging technologies, and sustainability. Held at the Changi Exhibition Center this week, the trade fair is expecting its biggest turnout, with more than 100,000 visitors. Now, India's largest airline, Indigo, is at the Airshow. Now, the firm faced significant operational challenges late last year, leading to widespread flight disruptions. Well, my colleague Yasmin Yonkers spoke to Peter Elbers, CEO of Indigo, on how the airline is charting a comeback.
Early December, we had a compounding effect of multiple factors. The new rules were introduced in November 1st. So we're actually operating the entire month of November under the new rules. And then by the end of November, early December, there were a couple of factors, some internal, some external, which compounded into a unforeseen and unexpected confluence. And that led to, indeed, a massive number of cancellations on December 3, 4, and 5.
Yeah. Talk to us about rebuilding customer trust, because I think people still have an idea of a stain on the name of Indigo, based on the delays and the events that they couldn't attend in December because of this.
Well, we had these 3 days of these significant impact. In those 3 days, we cancelled around 2,500 flights. Normally, we operate around 2,200 flights a day. So that was the impact on those specific 3 days. When that was basically done, we had a couple of priorities. First and foremost was to address the immediate customer needs, getting their baggage back, getting their refunds, getting them on their final destinations. Then it was to restore the network, which we've done actually in just a couple of days. We were back initially to 1,600 flights and just a few days later to 2,200 daily flights. And by the end of December, actually, we were clocking again 370 to 380,000 customers on a single day. So the regain was really on taking care of the customers immediately, refunds, luggage, compensation, and all the elements done. Then the stability of our network, which is very important to have that back. And basically, we were back by the middle of December on that and stable at the end of December.
Yeah, well, you're going through, reparations, you're recalibrating allowances for your pilots, you've got workforce policies. How are you approaching long-term compliance when it comes to crew well-being and their ability to continue flying?
Well, compliance is binary, right? You have to be compliant, and Indigo was compliant right from the start, and Indigo continues to be compliant. But clearly, we are building resilience back into the system. So the immediate need was restoring the network. The second part of it is being, increasing the resilience in our network. The winter months in India are always difficult in terms of, fog and weather-related issues. We have gone through that frame, which usually starts in the middle of December to early Feb, actually quite good with a very high reliability of our operation. So we are building in a lot of resilience, introducing new KPIs to look at it, engaging with our crews, engaging with the teams. So rebuilding this. And basically, we also take lessons from other large operators in the world who have gone through similar crises earlier and incorporate their lessons in our rebuilding.
Okay. I want to just talk about something that, really just came through right on the back of the EU-India trade deal, the U.S. Lowering tariffs on goods from India to 18%. How do you read this development at Indigo? Is it good for you?
Well, for the last, I would say, 10 days, we have seen a couple of events which are very good for India. And of course, there was first the EU-India trade agreement, which has been in the making for a long time, and which was concluded last week. Today morning, we saw this news. And clearly, with the growth of India, which is one of the fastest growing large nations in the world, with again a 7+% GDP growth, that fuels international traffic, that fuels the Indian aspirational traveler, and clearly the Indigo strategy of going more international, expanding our network, basically brings these elements coming together in a very good way.
Okay, and very quickly, talk to us about your latest quarterly profit coming in below expectations. How do you view this quarterly performance, and how does it bode in the context for your long-term financial trajectory?
Well, this quarterly results, which we released on Jan 22nd, basically was still a profitable quarter, despite all the things that happened. Had three unexpected events. One was the currency fluctuation, which is beyond our control, and we're taking a lot of measures to deal with it, but one is the currency. Secondly, there were some change in labor laws, which made us taking in exceptional items, and certainly was the impact of the operational disturbances early December. The latter clearly was the lower part of these three elements.
All right, and we last spoke last quarter of last year. You had launched your flight to China, which was quite historic.
Yeah.
And then tell us how that's going. And then on top of that, you just launched Greece.
Yeah, I mean, our network expansion is actually phenomenal. We have moved in the past 3 years from 70 domestic destinations to 97 today. And clearly that domestic feed starts to increase also our international footprint. So we have more than 40 international destinations now. We fly to China from both Kolkata and Delhi. We fly into Guangzhou. And now with the XLR coming in, we started a total new venture, flying directly from both Delhi and Mumbai into Greece. That in itself just underlines the enormous potential for direct flights. We have another 9 XLRs coming in this year, and that will allow us to have more and more of that direct connectivity.
I can't wait to get on an XLR. Yeah. Wow, that must be a game changer. And finally,
it is indeed, because these flights were, people had to transfer. Now they can fly direct.
I think that's a cool thing. Saves a lot of time. And finally, as CEO, what are your personal takeaways from December's chaos?
The resilience building and the connection with our customers and our teams. That is an incredible, important. You know it, but when these things happen, you're going realize how our frontline staff have gone, the extra mile, have really worked hard, tirelessly to make sure that our customers were dealt with in the best possible way. But when the system stops, clearly, it's a massive impact. But the teams and how they worked, how they stepped forward was really commendable.
Well, the newest merger in the space industry also generated buzz on the sidelines of the Singapore Airshow. Elon Musk's rocket venture SpaceX is acquiring his artificial intelligence startup xAI as he pursues plans to launch data centers in space. Well, Mr. Musk calls it the most ambitious, vertically integrated innovation engine on Earth and beyond. SpaceX is looking to launch 1 million satellites that would serve as orbital data centers amid a surge in AI demand. And they will harness solar power that could meet the heavy electricity requirements of data processing. Now, the combined company is reportedly preparing for an initial public offering that would value it at $1.25 trillion. Well, Elon Musk's move to merge SpaceX and xAI could reshape not just the AI race, but where and how the world's computing power is built. From space-based data centers to a potential trillion-dollar IPO, the deal raises big questions about competition, regulation, and the future of space as digital infrastructure. CNA's Julie Yu was at the Space Summit 2026 in Singapore, and she spoke with Marion Andreu, Chief Commercial Officer at Infinite Orbits, on the feasibility of space-based AI and what the merger means for SpaceX's IPO.
There are a lot of technical challenges in this kind of use cases. Some big companies are already working on it, actually, so I'm not surprised that SpaceX is looking at it. You need some very, very big satellite with a lot of power and a lot of data memory in it. So that's the kind of technology that still needs to be developed. And the AI will allow a process of data directly on board, on real-time, with a real-time analysis. So that's big breakthrough technology, but that still needs to be developed a bit.
All right, so how much advantage would this give SpaceX over traditional cloud and AI players like Google, Amazon, or Microsoft? Could this reshape the competition?
Well, SpaceX benefits from a lot of funding already and commercial contracts already. So, of course, they have the money to develop this kind of technology very quickly. I guess that some other companies may do it also, but in SpaceX, they are already well integrated in the space ecosystem with space players. So that is one point, for sure, one element. And then on the AI, their capacity is to move very fast and to do something that is actually very fitting with the market, very competitive. So they are really correlated to the market. That's one advantage that they have.
And Marianne, from an investor's perspective, how does this deal change the story ahead of SpaceX's planned IPO? Does it strengthen confidence or introduce new risks?
No, I think it goes at the same direction that other companies. Space players, just like Infinite Orbits, for example, are already using AI to do space, and that was very seen as something very innovative some years ago, maybe a bit too risky for investors, that they didn't see really what could be the use cases. Now the world has changed, and AI is more and more used in the space ecosystem. That's the perfect example. That's a big message to investors that actually this is the right direction to go for. And so that actually can help other companies to fundraise, because AI and space now are two fields that are naturally connected.
Well, the merger of SpaceX and xAI has drawn focus on data centers which quietly power our digital lives, from social media and streaming to cloud computing and AI. Well, CNA's Arnold Gay takes a closer look at the race to take data centers off-planet.
Have you ever wondered where all your online content, videos, photos, apps actually lives? The answer is data centers. Think of them as giant digital warehouses running 24/7, packed with servers to store and process the data we use every second. They can be small, as compact as a closet, or massive, as big as a shopping mall. With the explosion of AI, connected devices, and cloud services, McKinsey has projected that global demand for data center capacity could triple by 2030. And to meet this need, it says a staggering $6.7 trillion would be required. Major tech giants have announced tens of billions in annual investments to ramp up data capacity. Amazon now spent over $100 billion in 2025. Google followed closely with roughly $90 to $93 billion, while Microsoft is aiming for roughly the same annual spending starting this year. High-performance computing doesn't come cheap, and some argue it's not clean either. Now, these centers devour massive amounts of electricity, generate intense heat, and require water-hungry cooling systems. In 2024, they accounted for up to 1.5% of global electricity use, and that number is climbing. Now, companies are responding with greener solutions, renewable energy, innovative cooling tech, and smarter designs. Now, still, scaling these facilities on Earth is becoming harder, costlier, and more controversial. So, what if we move data centers off the planet? Advocates say space offers some compelling advantages. Constant solar energy, free from Earth's weather or night cycles, natural cooling thanks to the frigid vacuum of space, and virtually unlimited scalability beyond the physical limits of Earth. This isn't science fiction. Several companies are already taking steps. StarCloud launched a solar-powered orbital data center demonstrator last November. Axiom Space sent its first orbital data center module early this year. NTT and SkyPerfect JSAT are developing a space network to connect orbiting data centers with users on Earth. But the road to space isn't without its challenges. Rocket launchers are still expensive, despite falling costs from companies like SpaceX. Now, latency, the delay in data transfer between Earth and space, remains a key hurdle. And space brings new risks. There's solar radiation, there's space debris, and technical durability. Still, space-based data centers could one day redefine how we store, transmit, and protect the world's information. For now, though, it's an idea on the launch pad, still grounded in plenty of challenges. Until then, we'll just have to say, watch this space.
Head to CNA.Asia for more, including this commentary on why US tech firms are betting big on India's AI and data center infrastructure. And that's Tuesday's edition of East Asia Tonight. Don't forget your headlines anytime at CNA.Asia, and you can always look us up on Facebook and YouTube. Thanks for watching.